G'day, Scuddy here, coming to you live from location in Brisbane with a quick look at dollar yen. We all know that markets have been fairly sensitive to shifts in crude oil prices over the past couple of months. But when it comes to the FX universe, there is no cleaner read on sentiment towards developments in the Gulf than dollar yen, and the next couple of graphics demonstrate why. The first is simply a 5-minute tick chart that tracks dollar yen in black versus movements in Brent crude futures in blue and US 2-year yields in red. And you can see that over the past fortnight, they've moved often in lockstep with one another, really demonstrating the linkages between crude futures, the US interest rate outlook, and movements in dollar yen. And that visual relationship is confirmed by the correlation matrix on your screen, tracking movements in dollar yen versus a variety of different markets over the past week, month, and quarter. Take a look at that first column that tracks the correlation coefficient scores over the past week. With US 2 and 10-year yields, it's been nearly perfect. And with 2-year yield differentials between the US and Japan, it has been perfect over that period. And then go down the bottom and look at the strong and persistent positive relationship that USD JPY has had with both Brent and WTI futures, really demonstrating the linkages between all three markets. So what does that mean? When it comes to developments in the Gulf, particularly around the Strait of Hormuz, what happens there is likely to be very influential of movements in dollar yen, at least based on the correlations we've looked at today. If we see peace talks resume and Brent crude futures come lower, it points to downside risk for dollar yen. Of course, if we see a re-escalation, that would go and put upside pressure on the yen based on those relationships. Best of luck with your trading. I'll catch you next time.